A lot of these quality companies, they return to their all-time high like that and they just continue to take off. What is going on, guys? I hope you're having a fantastic Friday. It is a crazy day in the markets once again. As I have been saying, there is just so much volatility. One day you're down 2-3%, the next day you're up 2-3%, then the very next day you're back down 2-3%. So before we get talking about everything that is going on and everything that I would recommend doing before the election, or if you have any free cash or anything like that, I need you to drop a sub and leave a like, because we're doing a giveaway around here once we get to 250 subs for an Amazon gift card. We are quickly approaching and rolling into the holiday season, tons of unknowns. You might as well get you a little extra spending cash. So before we talk about the broader market in general, I want to hone in once again on Nikola, as we have still not received any additional updates from the company or any of their partners or anything like that on kind of future plans. And again, the stock is getting pounded today. As I said in some of my prior videos, a lot of these companies that, have investors who are interested in them or anything like that, they are way more apt to spook a lot easier when the overall market is doing bad. So once again, today you have the overall market and all the indexes in the red, where you're maybe 2-3% down on those. But then you look at a company like Nikola and they're going to be close to down to double digits, because they're thinking, okay, if all these major companies are down and they're selling off, why are we going to, trust a company like Nikola even much more than, a company like Apple or Tesla or anything like that to perform well in an economic downturn, especially when they're pre-revenue, they haven't proven anything, they don't have a deal with General Motors or, nothing at Nikola World, and all these unknowns and questions. So just wanted to put that 2 cents in there about Nikola a little bit, and before we touch on the broader market. And guys, in general, if you were young, I would encourage you to not panic during this time. Don't sit there and sell. You never want to sell going into the red. It's just a bad thing to do. Do not play the emotional game at all. What you should see all across the board right now is opportunities. There are so many incredible opportunities to get in on companies that are honestly, they're approaching, 20% off their highs, which is amazing. If you're thinking about inflation, right? 2 to 3% is inflation per year. So if you can come in and get a company 20% off their high, that is amazing. You're essentially locking in a guarantee that you are going to be beating inflation for 10 years if that company returns basically to its all-time high, which, if we know anything, a lot of these quality companies, they return to their all-time high like that and they just continue to take off. You saw it in the first downturn of the coronavirus, right? All these companies back in March and April, they were getting pummeled. They were down 50%. And what did they do? They returned to their all-time highs, and then they kept going. Then they're up, another 50%. And now they've pulled back maybe 20-30% or something like that. So you can expect to come in and get a great deal on companies that have the potential to absolutely 100% return to their recent all-time highs. So I'm gonna give you a few of these picks and why I think that these are really good companies to get in on and some of the benefits of each one. So first, and really the biggest winner of the day, was Google. They were in the green because after hours yesterday, they reported earnings. So if you remember, the last earning reports that Google had, they missed earnings for the first time in a long time. And the stock got beaten down a little bit. If you look at their year to date, they weren't doing as good as other companies like Apple or Microsoft because they, weren't hitting, their earnings. But they came out with earnings yesterday and they crushed it. They did an excellent job and they gave a much clearer vision for kind of where the company is going in the future. They're going to be focusing a lot more on the cloud, which is what I think a lot of people wanted to see. Cloud is ever expanding and is going to be a huge part of infrastructure and business and everything moving forward the next 5, 10, 15 years. And then they also called out YouTube and the importance and just how much of an impact YouTube has from a revenue perspective. If you look at the amount of users that are on YouTube, if you look at the news that flows through YouTube, I bet there are more people who watch YouTube than who watch like TV or anything like that. The reach of YouTube is amazing. It is an incredible investment opportunity. And you have to remember, Google owns YouTube. So it's amazing. Google, I think, has a lot of room to run. Very good investment. And I think that they are getting close to the time where they say, hey, we're going to do a stock split. And if we know anything, the stock always runs up before the actual split date. So it wouldn't shock me if Google, sometime here in the next 6 months, a year says, hey, we're going to do a stock split, and the stock continues to run up another 20 to 25%, which would be an awesome return on your money if you're looking at that stock. Next, I'm looking at some other companies that have, they've had really incredible runs the past 10 years or so. And these two companies are Apple and Visa, and they are both off their highs quite nicely. Visa is off their high by about $40. Their high was, $217, $220. Now they're down around $180. I have been picking up Visa myself. It is a company, if you just look at their 10-year chart, it is insane. And as things continue to shift to, e-commerce and all that stuff, Visa is going to be a central player in everything. And the next is Apple, right? Apple, they reported earnings yesterday too, and they had a disappointing, I take a step back. They actually beat earnings, but why investors pulling back and kind of selling is they saw a decreased sales in China. And again, I'm not really surprised because, right, you have a lot of tensions between the United States and China where, you're getting a lot of these companies that have a lot of impact or, a lot of their business does kind of rely on China because it's such a major market in population. It's not surprising that they didn't see a great quarter in China, but to me, I don't think that this is something that you should look too much into. I mean, Apple is one of the best companies out there, arguably the #1 company in the world right now. It is off of its high by like $25, $30. So I would 100% recommend going out and picking up some more Apple. Slowly buy the bottom. Don't just say, okay, all my cash is in Apple right now. Slowly buy the bottom. I mean, you are getting to levels in Apple that I absolutely love. And you see in these big tech companies, they do sell off. There's a lot of, maybe uncertainty in the short term, but in the long term, you are going to make a ton of money getting in on these companies right now. Lastly, I want to quickly mention a few. You got Walmart, Tesla, Coca-Cola, and Southwest. Now, I like these companies for a few different reasons. So Walmart and Coke in particular, they weather the economic recessions exceptionally well, right? So Walmart, if you remember in the coronavirus, they actually dominated. They were one of the few winners, even like through everything, because their stores remained open. They said, okay, while everything else is shut down, you guys can come to Walmart, you can shop, you can do all this. So Walmart has proved to be very resilient. They are off $10 to $15 from their high. They pay a dividend, they continue to pay dividends, and it's a company that is really trying to compete with Amazon. They launched Walmart Plus. They have a lot of stuff going for them. I have been slowly buying Walmart as well as Visa and Coke because I'm trying to build kind of that portfolio that is really, really not susceptible to economic downturn or anything like that, and they always perform well. And then that leads me into Coke, right? Like, it's a consumer staple. They continuously increase dividend year over year. They have paid a dividend for 50 straight years. You are safe. And it's $10 off its all-time high of like $60. So if you want to go in and get companies that you believe in, that are going to be around for a long time, that this is just a temporary pullback, absolutely 100% would recommend that. Lastly, I want to quickly touch on Tesla. I know I have talked a lot about Tesla in the past and why I'm kind of skeptical about Tesla. I am starting to warm up to Tesla a little bit because I really think, in the next 5 to 10 years, they're going to be a leader in the, in the car market in general, because if they can really do what they said, not so much about the million-mile battery, who cares about that? I'm looking at it more from a price perspective. They can get their cars down to $25,000. People are really, really, really going to start buying Tesla, loving Tesla. And, they're down today and they're $100 off their all-time high, at least at the time of making this video. So there is really good opportunity, and companies like Tesla, in particular, that are they run up on hype and then they sell off kind of once that hype reaches or that event reaches and comes to pass. So with Tesla, I think I'm going to continue to watch it. if it continues to pull back, it's one stock that really interests me because of its ability to just run up out of seemingly nowhere. And they are doing things to make their car cheaper. They came out a couple days ago, or actually maybe it was yesterday, and said that they are, lowering the price if you want autonomous driving or something like that in your car, they're lowering that entry price. So to me, this is big, and it's another step forward to them essentially making their cars cheaper for the everyday person to buy. And investors kind of saw this as like, well, they're not going to be making as much money per sale. Yes, that's one way to look at it, but then you can argue quantity over the amount, right? It's like, obviously you can sell, 150 Ford F-150s. That's going to make you more money than if you sell one Ferrari. So you kind of got to look at it like that a little bit. It's to me, it's moving Tesla in the right direction. And then for an investor, I see Tesla coming down. I don't own shares of Tesla. I am definitely interested in owning Tesla. So this is something that has me certainly quite a bit intrigued. So guys, certainly do not freak out before the election. See this as an absolute win. Tons of buying opportunities out there. If anything, if there is an economic downturn, you know what? Who cares? At least if you're in my shoes, I would say if you're under the age of 40 or 45, you should 100% be playing this downturn right now. Tons of opportunities to make money. Do not be emotional. That is my biggest advice. See all this as opportunity. Do not be scared. Do not, put all your 401k in cash. Just continue to let it ride. Continue to put money in. This is the time where the rich get richer. And there's a reason why. So before we go, if you feel like you have learned a single thing, just a single, anything, if your ears were on, hear me say, drop a sub, leave a like. I really appreciate it. And before we go, today in history, in 1974, there was what was known as the Rumble in the Jungle, which was a boxing match between Muhammad Ali and George Foreman. The good old-fashioned grill. Old George. Ali knocked out Foreman in the 8th round. So fun fact of the day. I hope you guys have a fantastic weekend. Do not panic about these markets, and I will see you